So now we are at fear instead of extreme fear. And we're almost at neutral on the Bitcoin fear and greed index. This is just ridiculous. It should have been bullish the entire time as sentiment dropped to levels I've never seen before. And now it's getting a little more bullish, and people are kind of changing their minds. Bigger accounts are like, yeah, this is going to be really good. We're going to start going up from here. You have to take your mind away from what a lot of people on Twitter are saying and make up your own mind of where we are in the bull cycle. For me, I've already made up my own mind since November 2022, thinking, okay, we're now in a bull market. The FTX only brought us down a certain amount after the lending platforms collapsed, and I knew that that was the start of the next round of going up. Okay, and actually during that time, interest rates rose 5 times. Okay, I digress a little bit here. So U.S. senators have reached a plan to end the government shutdown. So people are really bullish on that. They're also kind of wary on 50-year mortgages. I'm going to cover that in a second. So the same exact people saying the market is going to rally on a government shutdown or a government opening are the same people that said the market would rally during our last rate cut. Remember all those people that were screaming, oh, it's going to go to $150,000, $200,000 because we're dropping rates? No, it didn't happen. Actually, we went back down under 100,000 not too long ago. Now we're back at $106,000. It doesn't matter. It's all noise. I'm trying to teach you people this so that you can make your own wise decision instead of hearing all these goofballs that have their own little narrative that they're talking about and always change their mind at any 5% move on Bitcoin, okay? And for those of you who are wondering where Bitcoin is heading next, my suggestion is to stop looking at the Federal Reserve, okay? They're already printing 70 or $1 trillion every 70 days now. Guys, like, this is why I'm so bullish on Bitcoin. It's not because of raising interest rates, lowering interest rates. I couldn't care less. Government shutdown, I couldn't care less. It doesn't matter. The government never shut down. Please give me a break. There's still a trade war going on, and the Federal Reserve is printing tons and tons of currency. What government shutdown? There ain't none. Okay, so now we have the never-ending narrative game, all right? My bullishness never changed. We are still in a major bull market, and I still stick to that. Now, even Polymarket is saying that there is an 84% chance that the government will open up again. Even U.S. Senate advances funding bill to end the government shutdown. And so, yeah, whatever, take it as you will. But what I'm saying is we are still in a bull market regardless of what is happening in that realm, okay? Now let's go over the 50-year mortgage. This should make you more bullish than ever, and it should make you pretty sad because, let me just go over this. So this is from Adam Livingston, why I love the 50-year mortgage. Here's a full picture of the 50-year mortgage opportunity, including the extra interest you'll be wrecked by on the 50-year mortgage. Monthly payments, 6% interest on a $500,000 home. Why a $500,000 home? Because that's kind of like the median home price of the United States. And personally, this is one of the reasons why I think the middle class will be extinct within a decade. Okay, here we go. Monthly payments on a 6% interest on a $50,000 home. 30-year, $2,997, a 50-year, $2,632. You may thinking, oh wow, they get to save $365 per month, okay? Total interest paid. Here's what the government ain't gonna tell you here. So 30-year interest would be $579,000. A 50-year interest would be $1,079,000, okay? So the extra interest from choosing a 50-year is $500,000. So essentially, if you're stretching it out from a 30-year to a 50-year, which Trump wants you to do, I'm not picking on Trump, it's just the Federal Reserve, you're going to pay an extra $500,000, okay? And that's just on a $500,000 home. Imagine somebody that goes on to a $600,000 or $700,000 home. Now, let's see what happens if you would just simply forget that just buy Bitcoin instead. This is where you need to share this video to your normie friends so that they can be a little more educated if you actually care about them. Because if you do care about them, you don't want them to take out a 50-year mortgage, okay? So, okay, here we go. If you take out the $365 monthly savings and throw it into Bitcoin compounding at 20% interest for the next 30 years, you will get $8,403,654. And so why do I say 20% interest? Because that's essentially what you would get over the long run. So this isn't lending out your Bitcoin. This is essentially holding your Bitcoin and just relaxing and just buying dollar cost averaging, no matter what the price is, every single month for the next 30 years, okay? And that's going to give you approximately 20% per year. Now, yes, you do have the law of diminishing returns, because the more the market cap of Bitcoin rises, the harder it's going to be to double that, you know what I mean? But here's the thing about that, is that inflation is going to absolutely ravage the entire world. I've been showing you this for a long time. I even predicted that the next election, there's going to be $1 trillion printed every 20 days by next election. So with that said, I think that this return on Bitcoin could actually be lower than I'd expect. I would expect that to actually be maybe 30 to even 40% over the long run per year. So that is just because of inflation. I think inflation, you have not seen anything yet, because there's nothing stopping this. But he also goes on to say, remember this is a 50-year mortgage instead of a 30-year. So if you keep stacking $365 per month into Bitcoin, compounding at 20% annually for 50 years, your final stack becomes $445,081,000, which is a crazy amount. But keep in mind that in 50 years from now, that number $445 million will probably not be that much money, because they're printing so much currency. So the number is higher, but the purchasing power is way, way lower. And by 50 years from now, I mean, if they're still going on the same rate as they're going, we're going to be the U.S. is going to be printing $1 trillion every, what, half an hour, maybe? So yeah, keep in mind that when the first $1 trillion that was ever printed altogether in the United States, it took over 200 years to get to that point. So that is why I say this is the end game for the U.S. empire, especially the middle class. They're finished. There's no way they're going to last 50 years or even 30 years from now, even like maybe a decade from now. That is why you need to share videos like this to educate people to understand where we're heading and why their purchasing power is going to be lowered regardless of who they elect or what Federal Reserve chairman gets in, or even what the Federal Reserve is even doing at this point. Okay, and that is why we encourage people to go to learningcrypto.com if you want to get even more information on how we are dealing with our stack of Bitcoin and when we're going to be buying the dips and the bear market that is going to be coming. All right, talk to you soon.